Hello, Cornelia.
Hi Bob, could you please stop the recording just for now
Yeah.
until we actually getting started? Maybe you could start a new recording.
Yeah, why don't we do that? Let's go in and out right now.
Whatever you decide, but I think otherwise you could also like
I can trim it.
you take it and edit it at the end and cut away the part that is not
Okay.
related. Okay, maybe that's easier. Okay, I'll be back in a minute.
Okay. Hey, Isaac.
Hey Bob, how's it going?
Good. Welcome back.
Thank you.
You
Good to
decided to
see you.
go to Smagula's class again, huh?
Yep, I
And we'll
did.
see. We'll see how it goes. Hi, Brendan.
Hi,
How you doing there?
good, thanks. How are you?
Good. Cornelia left the meeting for just a minute. She'll be back, and she'll take us through Canvas. Make sure you guys are familiar with it for those who are not. And then we're going to go through chapter 1, which is a surprisingly long chapter. But we'll go through it today, okay? And also, when we get done, I will have this videotaped and made available this afternoon to everybody. So that'll go right into the module, okay? Are you from around here, Isaac?
I grew up in Santa Cruz actually, but I have a lot of family down here.
Okay. Well, I wasn't sure. How about yourself, Brendan? You a local guy?
Yeah, I grew up in Santa Barbara. I'm at UC Davis right now, but I'm doing dual enrollment.
Oh, okay. Well, we'll see what kind of a crowd we get to the class today. I don't know how many are in the class. Cornelia was here, like I said, 5 minutes ago, and asked to be relieved for a few
Cornelia is
minutes.
back.
Uh-oh, who's talking about her?
Hello, everyone.
Gotta watch this Isaac, Cornelia.
Okay. All right. So welcome, everyone. Let's wait one more minute. Brandon, did I have you in one of my soccer teams?
Yep. Yeah, you
Oh,
did.
that must have been a while ago, AYSO, right?
Yeah,
Oh my goodness.
absolutely.
I saw your name on my list. So let's see who has time to show up. Okay, and this private part, Bob, about the soccer, you need to cut out. Yeah, let's wait for one more minute and see who is able to join us. And for everyone else, we will put this on the modules in Canvas as soon as Bob had a time to, again, edit the beginning and then
I'll try to trim it.
upload this. Good.
Worst thing that can happen is I botch up the tape and then I have to do it again tonight by
Oh my
myself.
goodness. I hope you won't. Make a copy. Okay, so, but that's great. So, yeah, I'm not sure. We have how many? We have about 30 students enrolled, right? I believe.
Do we? I
Or
didn't see the list. Good Lord.
So we have a full class, but I mean, this is voluntary, and I understand it's the first day of classes and people have other stuff to do. So anyway, let's get started with the two of you who are here, and whoever wants to join. I would like to introduce myself. My name is Cornelia Alzheimer. It says Faculty Association on my screen, and I will change this right away because here is a secret from my professional life that not everybody knows. I'm also the president of the faculty union here at the campus, the SBCC Faculty Association. Another job that keeps me really busy, but I like to do it. And guess what? When I came to City College, it was not my plan to become a labor union leader. But once I started working with this, the one thing I realized is that being well-versed in accounting and being able to read a college budget and being able to make sense of what the administration tells you, how much money they have for sure salary increases, and to verify that makes a big difference and is a large advantage. And that's why I'm so happy that we have so many accounting students who kind of take on accounting, because I always say whatever way of life you are going, it can never harm to know, at least have some basics down in accounting. So that's great that you guys are here. So I am the main teacher for this class, but Bob is with me all the way because I'm only the main teacher for the Canvas part. But Bob will be the one who you will see in these live lectures most. He also has agreed, bless his heart, to be one of our main tutors. During the pandemic, it was really hard to recruit good tutors, student tutors. We have found 2 now, but they are just starting out. I would like to encourage you to consider, if you are staying beyond this 230 class and maybe taking the 240 right after that, that you consider tutoring for us too. It's a very rewarding job, and it really helps you become proficient in what you learned in this class. So just giving here a shout out for tutor recruiting. Good. So yeah, Bob, maybe you want to say a few things about yourself?
Well, Isaac was in my class. He knows me very well.
Oh.
And I just chatted with Brendan. Brendan, I've been teaching here about close to 8 years, I think now. I love teaching. Glad to have you in the class. And I'm a big sports fan. Are you a sports fan, Brendan?
Yeah, I am. Mostly soccer and a little bit of football, but yeah.
Okay. All right. Well, that'll serve well in the class then going forward. But I'm from New Jersey, but I've been out in California for 43 years. And we'll see how it goes.
Okay. All right. So thank you so much. Isaac, Brandon, do you guys want to talk a little bit, 2 sentences about you, why you are here in the class, what you are hoping to get away? And I would really like to know if you are planning on, this is a short course, as you probably know, if you are planning on taking the 240 right after that. Anyone want to just go ahead?
I'm Isaac. I'm from Santa Cruz, and I'm interested in taking this accounting class because I'm actually looking to intern for my dad's company this summer. And so I'm really interested in learning a lot more about accounting and how much I could use it in the actual workforce later on.
Oh, wow.
That's great. Perfect. Thank you. So your dad has an accounting firm?
He has a startup solar company in Silicon Valley.
Okay.
Oh my goodness.
So, yeah.
Cool.
Good luck.
Thanks.
Brandon, you want to add a few things about you?
Sure. I'm Brendan. I grew up in Santa Barbara, and I'm taking this course because I intend to declare my major in accounting or economics or something of that suit. So this is partially a major requirement, but also just figuring out if I'm interested in all that stuff. And I do intend to take ACT240. I think March 10th is when that starts or something like that.
March 20th. Perfect. Yeah.
Yeah, sorry.
Like 2 days after this class ends. Perfect.
Yeah, pretty sharp turnaround.
All right. So since this is a compressed format, let's hit the ground running. And if Bob gives me screen sharing permission.
Oh, hold on.
Yeah, I need a promotion, Bob.
Yeah. Okay, you should be good.
Perfect. So this is where what you should see, or similar to what you should see, because the teacher screen always looks a little bit different. Definitely, I have more links here than you have. When you first enter our class, this is our homepage. Also, the student announcement that I sent out earlier this morning looks, and yesterday looks very similar. I hope all the pictures come through. It depends a little bit on your browser. Some browsers don't show these amazing photos of Bob and myself. Please read this carefully. I also linked the Word document with an even more sophisticated or detailed syllabus, which I'm asking you to read and familiarize with. I will walk through this in a minute. The one thing I want to point out to make sure everybody knows that, not only the people who are here, but also anyone who watches this. So we will be using the following textbook, Wild Financial Accounting Fundamentals in the 7th edition. And I have a special agreement with the publisher that you will not pay more than $66 if you go with the most basic version, which is the e-textbook and the access to all the materials, which are class assignments, which are the PowerPoints, which are some like question and answer assignments, video assignments. So you need this access. And again, it comes with the e-textbook, and that's $66. However, if you click the links at the moment, it's asking you for $84. So for everyone who has already purchased for $84, the publisher has agreed to refund you. And for everybody else, until they have this fixed, and it does not show $66, please go with a 2-week courtesy access for the class. Okay, so this make sure that you are not spending more money than you have to. If you have taken Accounting 230 with me before, let me know. I will see, even though this is a new book, I will see if they are willing to give you a free retake if you purchased, even if you purchased our previous book, which was the Wiley book in earlier semesters. So we'll see what we can do for you. I really am trying really hard to keep the cost for the students down. Okay. There are a few important tips and suggestions on this first page. You are here. That means you have probably read at least until down here, where the link is to the optional Zoom lecture. We will meet every Monday and every Wednesday, with the exception of that Monday where we have President's Day weekend. But for that Monday, you will get a video recording. We will meet for these Zoom lectures, and I hope more people can make it during their lunch hours on these days. In addition to those, we also have live Zoom tutor sessions with Bob. And in case you are local, you can also come to in-person tutor sessions. And we are, as I said earlier, at the moment recruiting and training 2 new student tutors who have already taken this class and who have already taken the Accounting 240 class. So they are kind of advanced students, and they will also help out with tutoring on days that we don't have coverage. For example, Saturday and Sunday, we don't have any tutoring yet. And so we will try to find some coverage on the days and times that are not covered. Canvas also offers Net Tutor, which is, these are also live tutors. That is a tutoring service. They are live Sunday through Thursday from 2 to 9 p.m. So they have pretty good hours. If you click on Net Tutor on the left-hand side, there they say at the moment they don't have anything. Wait, this looks a little bit different. There we go. Here, and then you click on accounting, and at the moment, because we are not there yet, and it's Monday, right? We don't have drop-in tutoring available. Let me see, but oh, sorry, they changed their hours. They are now Sunday through Thursday. I will change the hours in the on the front page. So they have 5 days a week. It's from 2 to 9 p.m. And you never see the tutor, but you can communicate, you can upload your assignments or photos from your assignments. So this is a good option as well, because they have so many hours, right? For sure. Otherwise, please check in with Bob, check in with the students who are in the department, because they have taken the very same class that you have been taking. And so they also know a lot of the teachers and can help you out most efficiently. Extra credit, super important. We are awarding extra credit if you have attended at least 5 sessions. Either you guys have already one, right? The live lectures, or the Zoom tutoring, or the in-person tutoring, or the Net Tutor sessions, right? If you're going to a Net Tutor sessions, please take a screenshot, just, to verify that you were actually there. The expectation is that you should stay for about half an hour for the tutor session, or whatever it takes to have if you have a specific question, to have that resolved. This said, I also would like to focus on how important I feel tutoring is, not only to answer a question, but also just having a little bit in these online classes to have an option to say, okay, Sunday nights between 5 and 7, I know Bob is on Zoom, and probably a couple of other people also from other accounting classes. And maybe I make this the time where I work on my homework assignments, right? And so I'm not alone. I can switch my camera on or off. I can chat with Bob about baseball if I want a little bit, not too much so, right? And I could just listen in what others have, maybe in challenges in their homework. I pick up a hint, or I can ask my own questions, right? It's just more like a hangout place. You will see that if you come to the in-person, if you have a chance to come to the in-person tutor hours, people bring their lunch, or people bring coffee. And again, Bob there's no accounting question and no sports question that Bob can't answer. I promise. Well, maybe a few, but if he doesn't know it, he looks it up on his phone. Okay. So let's have a focus on the left-hand side, syllabus link. Super important. That's why it's right on top. Here's where you can see the list of assignments that are due. These are the assignments which have a due date. You will see what they are. There is, for every chapter, a reading. There is a video assignment, and a basic one. There is homework exercises. There is more like towards the end, you should have a need to know video. This is what you should have take out of this chapter: a quiz, a question and answer training, and a summary. I know this all sounds like a lot, and it is a lot. I don't want to kind of like not be in full disclosure about that. It is a lot, because we are basically taking a 5-unit class in half the time, in half a semester. So please stay on task. I understand if you are maybe like missing out an assignment or two and want to have a day or two additional time, but I can't really give you much more than that. Like, so if you need an extension, just let me know. You also see again the everything here on modules. The modules are, so this is the start module for chapter 1 and chapter 2, chapter 3. They are then looking all the same. The welcome module has all this like important, like, okay, what you need to know, how to use the SmartBook assignment, how to register for Connect. And then these are our first assignments: welcome discussion photo, syllabus quiz, and more extra credit. You will see that Bob and I are very generous with extra credit because we understand that this is a very challenging class. And yeah, so if somebody wants to do or has the opportunity to do extra work, please go ahead, do it. You never know when you need those points, maybe later when, you know, maybe you got a time crunch and cannot do all the assignments in time. And there is unless there's extenuating circumstances, there's a 25% deduction for late work, right? For sure, you know, first week, we are a little bit more relaxed about that because we are all trying to get into the groove. But the bottom line is, please try to be on target with your work. So here again, the top of each module is all resource. There's a start here where I give a little intro to the chapter. And then we have the reading in the textbook, the lecture material, and that will also always be the point where we will post also the video in case, well, you are here, but in case you want to revisit something, and then the PowerPoints. And then there's this big header, graded items, guys. This is where there's the points, right? A chapter summary. Chapter summaries need to be handwritten. The concept, the startup videos, the SmartBook question and answer, the need to know videos, the homework exercises, and the quiz. Everything is pretty much 10 points. So it's really easy to calculate. Every assignment has pretty much the same value. There's 2 exceptions, which I will show you later. Same for chapter 2. Again, at the beginning, you see the resource files, right? The reading, the lecture material, the PowerPoints. And then in the second part, after this big header, you see the graded items listed. And I am suggesting to do these in this order, like first do the reading, then write your chapter summary. You could do that actually while you are reading the chapter. Then do this. These are mini videos with a few question and answers. SmartBook is just Q&As about the chapter. The need to know videos is the same, again, focusing on the main takeaways of the chapter, and then the homework exercises and the quiz. You can take everything multiple times with the exception of the quiz. Everything else, you have as many shots as you want to. Well, the summary, you don't want to write a summary more than once. It's a lot of work, right? Okay. All right. What else? There is your grade. You can see your grades. You can see the other people. I can't click this now because it will disclose everybody's like grades if somebody has already submitted something. And then this is violating privacy laws. What I would like to focus on is that these first assignments, because we are on a compressed schedule, please try to have them done by Tuesday night. Okay, all the assignments are due by midnight. Okay, so let's start and see how we get onto Connect. So if you want to go to any Connect assignment, you click on this assignment, and it should either, when you do that the first time, it takes you to the registration registration page. For sure, it does not take me to the registration page, but it will take you to a registration page. This is our reading. So this would be our reading assignment. This is basically, if some of you want to buy a hard copy textbook, right? This is basically the same thing what you see in the hard copy textbook. And you can just like turn the pages by clicking here. And that's your reading. Okay. Then we have, let's try something else. So here would be the smart book. Always launch it. And then, oh, look, one student has already submitted everything. Wow. I have to go to preview because I'm a teacher and I actually designed this assignment. And so here is another option to do that. You start your questions and then, okay, multiple choice question. Why does a business need accounting information? I'm asking our students. Look at those. What do you think? Anybody? I like the last one. Accounting inspires management to work harder in order to climb the corporate ladder. My suggestion would be actually this one. Records business transaction, communicates financial information. And now then I'm asked, how confident am I? I'm actually pretty confident that this is right. So I will be clicking high, right? And my answer was correct, right? Accounting records business transaction, communicates financial information. Well, this was not rocket science. But then we can go to the next question, okay? So let's assume this is now a question I'm not so familiar with. Do you see on the bottom right, the little icon for reading? So I can toggle to the part in the book where this is actually like covered and will be highlighted in yellow. And then you can go back to the questions. Well, so if anybody asks me, so why am I supposed to then do the reading at all before? Well, I'm telling you, because these assignments are timed to take you 45 to 60 minutes after you have read the chapter. If you decide to not read the chapter and you rather want to jump right into those questions, it will take you at least twice as much. I guarantee you. So my suggestion is follow the suggestion out in the Canvas, read first, then do the summary, and then at some point do this smart book. Okay, so we are back on the modules page. Again, this is a shortcut to the live lecture link. Here is the live tutor link. For you, net tutor. I will send announcements and I will send reminders what is due on a given day. I will also let you know if there's new job opportunities. I will actually send a message out as of today. If somebody has taken the 110 and is already like getting ready to like start a new job, I have a receptionist offer from actually one of our teachers, Colby Selman. She's not looking for an accountant, she's looking for a receptionist. And then I have an accounting job actually at the fish market in Santa Barbara. So yeah, interesting jobs. We once in a while, like we have businesses, local businesses reaching out to us. So, and we will always forward those to you. Okay, so is there any question you have? Oh, I wanted to say before I get there, I wanted to say the assignments that are worth more than 10 points, right? I said every assignment is about the same, that's 10 points. The assignments that are worth more than 10 points is we have two faculty financial statement analysis assignments, which are worth, I believe, 30 apiece. And then the exams, we have 3 exams and they are each one worth 100. Everything again is online. The exams are open book, open notes. There's no proctoring happening, but they are timed. So don't think, I go into this exam and I'm just going to look up every question. It's not going to work. You will be timed out. So please make sure you study. I will have for every exam, you will have a sample exam with similar questions So I would like you to really encourage you to do the sample exam at least once and see how well you are doing. If not, then do it again. It will change the answer every time. Okay, so please make sure that you go well prepared in the exams, because those are the ones which carry 100 points apiece. But on the other side, again, I said at the beginning, we will have extra credit. So if one exam goes not as great as you were hoping, there is the extra credit to make up for this. And also there's the majority, I think 2/3 of the points are in the regular assignments. So the secret is do the regular assignments, stay on time, stay on task, and you will be doing fine. You will be doing fine. But it really, you have to put the time in. Any questions? Nobody? Okay, then I think I'm giving over to Bob. Bob will now go to module 1. If you also want to have on your screen, in addition to Bob will share his screen, but if you want to have the slides for today, I showed you where they are, module chapter 1, and then go to PowerPoints. That is exactly what Bob's going to lecture. Today's lecture is pretty easy. It should not take you too long. So thank you for taking this class. Never hesitate to reach out to me or to Bob. My cell phone number, my personal cell phone number, is on the top of the syllabus of the Word document, right? That is linked in, that it was linked into my email. It's also linked on the homepage, and it's linked on the syllabus page. There is a link to a document on the very top. You'll see my personal phone number. I encourage you to use it, but please limit it to urgent questions, and always tell me your name and that you are in this Accounting 230 8-week class, right? Because that also keeps me on target and said, oh my goodness, this is somebody who has a really urgent question, because we can't afford to lose a day. So thanks again, everyone. Have a great lecture and a great semester. Bye-bye.
Thanks, Cornelia. Okay, it's just us now, huh? Let me ask you a question. Brendan, did you take Accounting 110?
No, I did not.
Okay, how about you, Zaran?
No, I did not.
Okay. All right, that just gives me a little bit of hindsight. I know Isaac certainly did. Give me a moment here to rack this up. Do you all see the screen now? It says Accounting Business Chapter 1.
Yeah.
Okay. Yeah, I need that verbal reply, because on a few occasions I've done the whole darn lecture without sharing the screen with the students, and nobody told me. So I'm extra careful about that. Okay. For those of you who took 110, this is going to look very, very similar. So let's get started here and learn a little bit about the ups and downs and the accounting equation and some other nice things, huh? Learning objectives, the importance of accounting, the users and the ethics. What are accounting principles? And we're getting to add a little bit of analytics, just a little bit, and some procedures. Purpose and importance of accounting, huh? Accounting is an information and measurement system, identifies records and communicates an organization's business activities. Accounting is often called the language of business. If you don't have a good feel for how the numbers work, you're going to have a tough time making decisions in your business, or maybe even in your career as you go forward, huh? But accounting, we identify transactions when they occur, we record them, and ultimately communicate them to the appropriate people. The users of accounting, the users of and opportunities in accounting. We can talk about external and internal users, okay? Accounting, like I just said, called the language of business, because organizations set up an accounting system to communicate data. Accounting serves many users, internal and external, okay? External, Lenders need your financial statements. Auditors, shareholders. No one's going to buy stock in a company unless they have a pretty good feel for what the numbers are like. The board of directors certainly needs it to make decisions, and regulators. Lenders, a bank. Nobody's going to loan you money without good financial statements. So external users. External users mean people who don't work or have a relationship with the company. But guess what? There are plenty of internal users, huh? Everybody who works for the company needs to have some understanding of the numbers. Your research and development people, purchasing, so they know how much they have to spend and how to spend it. Human resources, they need to know what the future looks like to some extent so they can prepare for hiring. Marketing managers, they're the first guys who come into the budget meeting, and they come up with the amount of sales we're going to have in the next period and monitor that. And production managers and marketing people, they could be getting paid on a little bit of a commission. In other words, marketing gets paid 6% of all gross sales. You're darn right they're interested in tracking the numbers, huh? The production managers, maybe they get $1 for every extra finished product they can get off the assembly line. So internal and external users. I'll talk about this just briefly. Opportunities in accounting. Accounting information is in all aspects of our life, whether you know it or not. When we earn money, pay taxes, invest savings, budget earnings, and plan for the future, we use accounting. Opportunities in accounting, financial. You can go work for a bank, you can work for a stockbroker, you can do consulting. Managerial, you get yourself in with a company and you're in charge of their accounting as a controller or cost accountant, do budgets. Taxes, maybe you have a real interest in taxes and get a job with the government. An IRS guy, the IRS is always looking for CPAs. And you know who else looks for CPAs like crazy? The FBI, believe it or not. And you can double check on that and explain why. And then there are accounting related jobs that are just by their nature accounting related. Lenders, consultants, analysts. Oh, there's the FBI. Yeah, they like the forensic accountants. Why ethics are crucial. Ethics, huh? The goal of accounting is to provide useful information for decisions. For information to be useful, it must be trusted. This demands ethics. Ethics are beliefs that distinguish from right and wrong, and they are accepted standards of good and bad behavior. So with a lot of transactions, you're going to have to identify an ethical problem, consider the consequences of a decision, and then make that decision. Your company may ask you to do something that doesn't feel right. They may say to you, let's record some sales. Let's cut some invoices and pretend we have an extra $100,000 in sales. If we do that, we can convince somebody to loan us money and then we'll be okay. That's a real ethical problem that you need to attack. You need to think about the right thing to do, consider the consequences, and choose the best action. And in that one, you certainly would not allow yourself to be pressured into doing that. This is kind of a fun little thing, the fraud triangle. There's usually 3 factors existing for a person to commit fraud: opportunity, pressure, and rationalization. Pressure, let's start with that. You know, you have a job and you've been paying the bills okay, you and your wife. Maybe she gets laid off. We're going through a period of some inflation now. Prices are going up. It might be a little hard to pay the bills. So it's very tempting to try to dip your hands into the company's bank account and grab some money. That's pressure, huh? Rationalization, where you say to yourself, well, everybody does it. I know this person steals from their company and they get away with it. That's another one of the triangle. But the one I want to talk about more, a little more detail, is opportunity. If your company has poor controls over the assets, they leave money lying around, or they don't do bank reconciliations, that's going to lead to a good person going bad. And I always like to tell this brief story about a woman who worked for the police department. Isaac probably heard this story already. She worked for the police department for a number of years after high school and did very well. She earned a bunch of promotions. She worked on the computer system. She worked a little bit in the financial office. And eventually they gave her the power to control the computer system, collect the cash from fines, and input that into the system. Well, this person quickly learned that when she got your $40 parking ticket in the mail for parking on Shoreline Drive, she would just take that cash and put it in her bank account, and then she would just cancel it in the system because she had that power. That's an example of the systems need to be segregated so people can't be tempted. So she went from a well-respected employee to a prison sentence, which she's still probably serving. Sarbanes-Oxley, huh? 20 years ago, Congress passed this act. It's to help stop financial abuses at companies, public companies. It came out of the Enron scandal of 1999, 2000, 2001. Enron was an oil distributing company in Houston, Texas, that was the darling of Wall Street. The stock went up and up and up, and they were getting all write-ups for how great they are. And then one day, a woman for Fortune magazine wrote an article saying, how does Enron make its money? And when they really looked below the sheets, it was all a con game. Long story short, Enron turned out to be the largest private bank reconciliation in American history. The accountants were in on the fraud. The auditors were in on the fraud. They were billing out nonsensical invoices to people that didn't exist. They were hiding assets. They were inflating assets. It was just incredible. So Sarbanes-Oxley, Paul Sarbanes, James Oxley, senator and a congressman, they came up with this act, which says that companies now actually have to know what's in their statements. Now that sounds pretty obvious, right? But a CEO of a company, he would be presented with this data, and he would say, hey, I don't know anything about the accounting. I just run the whole company, and could get away with it to some extent. So now the owners of the company, the CEOs, top officers, they must sign off that they know what the heck is in the numbers. Hard to believe that wasn't the case before Sarbanes-Oxley. And the Dodd-Frank Wall Street Act is a way to hopefully, once you got stiffed by somebody like Bernie Madoff, you may have heard of Bernie Madoff, the largest bankruptcy in history, $65 billion. He was a con man running a pyramid scheme. These Dodd-Frank laws are called clawbacks, which hopefully will recover some of the money that people have been cheated. The whistleblower provision, you blow the whistle on your company, you'll get 10 to 30% of the sanctions. So they're encouraging people to rat out their company. But is it really ratting out if the company's going out of business and taking everybody with them? Generally accepted accounting principles and define and apply. Financial accounting governed by concepts and rules known as generally accepted accounting principles, GAAP. Remember GAAP, you're going to hear that a lot. GAAP aims to make information relevant, reliable, and comparable. The information has to be relevant. If you're looking at your payroll department, it's relevant how much the people are making, how much they're projected to make, how many people you need. Their height and weight is irrelevant. In other words, this data you might have, irrelevant. Reliable information, if it's reliable, it's trustworthy. It's trustworthy. You'll be able to negotiate loans. You may be able to issue stock to the public. You may be able to issue a bond issue to the public. And the information's got to be comparable. You're using the same policies all the time, and the numbers make some sense. We're not going to get into international standards really at all in this course. They throw a couple of slides in here, so I'm going to just pass through this. And I'll triple check with Cornelia if that's the case. That has been the case in the past. The FISB and the International Accounting Standards Board, they're just the same thing. One is FASB in the United States, the rest is Europe. And they have different objectives to provide information, give qualitative data, come up with the right elements, recognition, Here we go. GAP, principles, assumptions, and constraints. General principles are the assumptions, concepts, and guidelines for preparing financial statements. The specific principles are detailed rules used in reporting business transactions and events. Let's look at some of the accounting principles. And there's about 20 of them. You as you get through 240, and maybe if you go on to other accounting classes, taxes or something, you'll run into all of them. Cost principle. Accounting information is based on actual cost. Actual cost is objective. We paid $10,000 in electricity bill this past month. That's an objective number. That's the cost. We bought some assets for $10,000. We put them on our financial statements at $10,000. We bought inventory for resale. We paid $100,000 for that. That goes on our balance sheet at $100,000. What I'm trying to drive through here is that everything on our financial statements is based on actual numbers, not forecasts, not budgets, not guesses. The revenue recognition principle, super important, and you'll be familiar with it probably in the next half hour. Revenue recognition principle. Recognize revenue when goods or services are provided to customers and at an amount expected to be received. In other words, you recognize your income, which is the same thing as revenue, income and revenue, same thing. You recognize your revenue at the point of sale. You don't care if the customer has paid you or not. Most business is done on credit. So you sold me $60,000 worth of your product today. That's your income today, even though I'm not going to pay you for 90 days. Okay? And the same thing happens with the reciprocal, the expense recognition. The expense incurs when the expense, let me say that clearer. The expense is recorded when it's incurred. For example, the end of the month comes and you look at your financial statements and you don't have any electric expense. Well, the reason you don't is you don't have the electricity bill yet, nor are you going to get that bill probably for another 25 days. You're going to have to come up with a reasonable number based on a systematic and rational basis as to how much that electric bill was and record it. I said there's no guesswork on the financial statements. I guess there is to a certain extent with these accruals, but it has to be done on a systematic and rational basis. If your electric bill has been running the same every month, you can't suddenly say it's 10 times higher and reduce your net income and save taxes. And full disclosure, a company reports the details behind the statements. These would be the notes to the financial statement, and investors love to dig through those notes. Some other accounting assumptions, and I don't expect you to memorize these as we get done with this period today, but these are low hanging fruit for the test. Going concern assumption. The business is presumed to continue operating instead of being closed or sold, okay? You might have a very successful business through next month, but then at the end of next month, the product you sell has been deemed unsellable, that it's toxic. Well, the auditors would have to point that out, that even though the business is going okay up to this point, it's not a going concern. Money unit assumption, everything's in money, dollars. Business entity assumption. This is going to waste a little bit of our time in up to the first test. We're talking about withdrawals by the owner from a small business. A business is accounted for separately from other business entities, including the owner. For example, a small business, you're the accounting guy for a small business, and the boss comes out and said, Zoran, give me a check for $5,000, please. Well, you're the controller. You have to know what that money's for. And you say, yeah, sure, boss. What's it for? And the boss says, my wife and I are taking a trip to Europe for a week. Well, at that point, you know it's not a business entity item. It's personal business of the owner and needs to be recorded in a certain way And the time period assumption. The life of a company can be divided into months, quarters, years for purposes of handing out financial statements. We can talk a little bit about this. Sole proprietorships, partnerships, and corporations, some of the major attributes. This is an interesting screen for you guys to look on your own, I think. But just briefly, a sole proprietorship, one owner, really easy to set up and shut down when you're done. The only problem is if you invest $100,000 in a business as a sole proprietor and you rack up unpayable bills of $1 million, you are stuck for paying the $1 million. You have no protection from getting dinged above your original investment, okay? And the business dies if the owners die. I guess we know that. Partnership, 2 or more partners agree to set it up, and they have their own what's the word I want, contract on how the profits are going to be shared, how much they invest in the company. And just like a sole proprietorship, a partnership faces full liability. Partnership starts off and goes $1 million in the hole. Tough luck, partners. You have to come out of your own pocket. Corporations, they don't have that problem. Corporations are owned by shareholders like myself. I own shares of Coca-Cola, for example. If Coca-Cola went bankrupt, the only thing they would get from me would be the value of my stock. That would just disappear. But corporations are easy to buy and sell stock in, a little harder to set up, but you get that protection. And then the limited liability company is going to skip that one. We don't go over that at all. And I'm not an expert in the LLCs. I think it's going to come up later in the course, though. Accounting constraints, cost benefit. Only information with benefits of disclosure greater than the cost need to be disclosed. Jesus. Materiality. This one you hear all the time. Only information that would influence the decisions of a reasonable person need be disclosed. Coca-Cola issues their statements, right? They're a multi-billion-dollar company. And they issue their financial statements and they're done for the year. And then the controller comes running in. He says, oh, my goodness, we forgot to record $50,000 expense at our bottling company in Santa Barbara. Well, the bosses will look at that and they'll say to themselves, we're a multi-billion-dollar company. $50,000 is a drop in the bucket. Don't worry about it. It's immaterial. Here we go. So you guys who took 110, we got the accounting equation coming back. Look at this equation, everybody. You need to know this like the back of your hand. The accounting equation. Assets equal liabilities plus equity. Assets, just like it's defined in the dictionary. An asset is anything of value owned by the company that's going to help them make some profits in the future. Assets. What are assets? Cash is a wonderful asset. Accounts receivable, the list of people who owe you money, that's an asset. Inventory is an asset. Buildings are an asset. Prepaid insurance policies and supplies are assets. So assets equal liabilities. Excuse me. Liabilities simply means a debt. That's all it is. It's a poker chit. It's money that you owe. So if you have a company that has $2 million in assets and has $150,000 in liabilities, the company on paper is worth $50,000. Okay. So let's understand that equation right now. And then they're expanding it pretty quickly. Assets equals liabilities plus contributed capital. I say we skip this for now, and we'll hit it pretty hard in a few more slides. Now we're going to do something we do in 110. Analyze business transactions using the accounting equation. When we get done here, you should have a pretty good feel for how the accounting equation must always remain in balance, what increases and why, what decreases and why, and get that good feel for when we start next chapter on debits and credits. Chaz Taylor invested 30,000 cash to start a company called Fast Forward. Now, what you're going to learn here is every transaction has to have at least two items at a minimum. You can't have one. You have to have two accounts. So in this account here, he invested $30,000 to start his company. So let's look at the accounting equation. He invested 30, cash goes up 30,000, and so does common stock, okay? He invested it in a stock. Purchase supplies, paying cash. Well, now we have two accounts again. One is going to go down, right? Cash is going to go down. Supplies is an asset going up. Whenever you buy a supply, it's an asset. Whenever you buy an insurance policy, it's an asset. It's when you use them, they become expenses. So take a look. Supplies went up $2,500. We should have $30,000 on each side of the equation. Purchased equipment for cash. Okay, let's think about that. He bought equipment for cash. Well, equipment has to go up. We now have equipment we didn't have 5 minutes ago, and we paid cash for it. So the asset cash is reduced considerably by the 26,000, gets us down to only 1,500 in cash, but the offset set to that is the equipment. Okay. Purchase supplies. Remember what I just said? When you buy supplies, they're an asset. They're called a prepaid asset. So we bought supplies. Let's see. Yeah, supplies go up. And also going up is accounts payable because we bought them on credit. We bought them on credit, meaning that they're going to provide us with the product, but we're going to pay it 30 days from now or 60 days from now, whatever the contract calls for. Okay, so supplies went up 7,100. Our assets are now way up to 37,100, and we're in link with the equity and liabilities. Now, let's look at some transactions with the revenues, expenses, and maybe dividends. Provide services for cash. Provide services for cash. Consulting services to a customer, we received $4,200 right away. Okay, that makes it real easy because we're getting the cash at the same time we performed the service to earn the revenue. So what you're going to see here is cash goes up. And then over here on the equity side, revenue is going to be a part of your equity. Revenue went up 4,200. So now we have 41,300 in assets, and we've got 34,200 here in equity, 7,100. Payment of expenses in cash. We had to pay some expenses. Here, now we have three different accounts involved, huh? We paid rent of 1,000 and salaries of 700 to employees. So the cash is going to go down by 1,700, and the rent is going to go up by 1,000. And rent and salaries. Oh, I just have to move this out of my way. I didn't see it. There's the $1,000 in salaries expense. There's the 700 in salaries, 1,000 in rent. We're still in balance. So right now, if this company prepared their financial statements, they would have a profit of $4,200 minus 1,700. Remember that expenses decrease equity. Anytime you have an expense, it decreases equity. Anytime you have a revenue, it increases equity. What is equity? It's the net worth of the business at that point in time, defined as assets minus liabilities. Provide services and facilities for credit. As soon as you see the word credit, you know there is no cash involved in the transaction. And this is how the business world works. So we did some consulting for 1,600 and rents facilities to a customer for credit. So let's see how we're doing here. We have accounts receivable going to go up 1,600. What is accounts receivable? That represents the number of customers who owe you money, the number in dollars that they owe you in total. So that number's gone up by 1,600. And then we get consulting revenue of 1,300, I guess, or 1,600, and then 1,300. So 1,900 in cash, I'm sorry. And you see the same thing. We picked up some more revenues. Transaction 9. Somebody pays us. Remember that 1,900 we just recorded? Wow, a couple of days later we got the bill. We got the payment. So our cash is going to go up. One asset goes up, cash, and accounts receivable goes down. It's just a change in assets. That's all it is, a switch in assets. We got the best asset we could get, $1,900 in cash. They made a partial payment for supplies purchased in transaction 4, huh? They made a partial payment. So let's think about this. Cash is going down, but there's no expense involved because we already bought the supplies months earlier, transaction 4. So take a close look at this, huh? Cash goes down 900. That's the amount we're paying. And so does our debt. We no longer owe 7,100. We owe 6,200, and we're still in balance. Cash dividend to owner. This is what we were talking about before, about the business entity principle, that the business of the business, if you will, must be separated from the owner's personal business. So here the owner withdrew $200 cash for personal use, okay? That's called a withdrawal. Maybe they're going to call it a cash dividend in these slides here. Let's find out. Remember that the dividend account actually increases. The dividends account actually increases just like our expense account. But total equity, well, that's a confusing couple of sentences there. I'm sorry I got into that. Dividends will reduce your equity. Let's put it that way. So let's take a look. $200 minus, the boss took that, but we took $200 out of equity. The company is no longer worth $40,600. Now it's only worth $40,400. When the boss takes money out of the company, that is not an expense. It's a reduction in the net worth of the company. And here we have the summary of transactions, huh? So here we go. They're just summarizing everything. And they come to a total at the bottom. You see the total at the bottom? If we close the month right now, we could use these numbers to prepare the financial statements. And identify and prepare the basic financial statements, huh? And how they intermingle with each other. These 4 guys you're going to be seeing forever. The income statement, the statement of retained earnings, balance sheet, statement of cash flows. They are prepared in this exact order. They cannot be prepared any other way. I guarantee you'll get a couple of questions on the test trying to trick you into doing the balance sheet first. You can't do it. You have to do the income statement first. The income statement shows the company's revenues and expenses, their sales and expenses to get the net income. Sales minus the expenses equals net income. Who knew? Statement of retained earnings, you're going to take the beginning retained earnings balance, and you're going to go to the income statement you just prepared and add to it the net income. And then you're going to come up with the new retained earnings number at the end of the month. The retained earnings is simply the beginning retained earnings balance plus net income or minus loss minus dividends, if there were any. And then we can do the balance sheet. This describes a company's financial position at a point in time. The balance sheet is really a restatement of the accounting equation, and it shows the month-end balances. If you see cash of 100, that means you had $100 at that moment in time. It is a snapshot in time. which is different than the income statement and the retained earnings statement, which go for the whole month. Income goes up, up, up every day. Expenses go up, 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 and then we cut it off. With the balance sheet, things go up and down all the time. So we're interested in their resulting balances. Cash flows, we're going to get a lot involved with cash flows. I find cash flows interesting. We're going to have inflows and outflows over a period of time. And I believe we have an entire chapter just on statement of cash flows. Take a peek. Now, they took these numbers right from that final summarized slide. Remember that? Summary of transactions, huh? Let's look at the revenue. I see 6,117 on the bottom. Let's see if they're using the same numbers. Not quite. They're making me look like a dumbo. Anyway, these are the numbers they're using. The revenue, consulting revenue was 5,800. We rented those chairs, you might remember. Total revenue, 6,100. We then itemized the expenses one by one, and we come up with total expenses of 1,700 for a net income of 4,400. That's a pretty darn good profit, I would say. That's like a 70% return on your money. Now look at the statement of retained earnings. Remember we said it's the beginning balance, which was zero in this case, because we just started this company. Fast forward, zero. Net income is 4,400, less the dividends of 200. There's our retained earnings at the end of the month. And only now can we do the balance sheet. Let's take a peek at this balance sheet. Well, let's see what we have. We have cash, supplies and equipment totaling 4,400. Remember that famous 4,400? But we have liabilities, excuse me, of 6,200, which means that our total equity is 34,200, and we're in balance. Assets always must equal liabilities plus equity. Assets equal liabilities plus equity at all times. And here's the cash flow statement. I'm not going to get into this in great detail because we have a whole chapter coming up on it. I just want to show you that cash flows represents the difference in cash from the beginning and the ending of the month. So this company had zero cash since it was new. And at the end of the month, they had 4,800 in cash. This statement tells you where they got the money. They got 1,000 from operating. That's where you want to see. That's where you want to see the cash generated. That means that they made that money by selling their product, by doing what the company was supposed to do. It looks like they spent a lot of money in investing. Okay, that's not operating. Investing is you go out and you buy stock, bonds, you buy a gigantic piece of equipment that's going to last a while. And then when you see financing, think borrowing. They borrowed money. In this case here, they didn't borrow it. They cash provided by financing activities. Cash. They raised money through shareholders. They didn't borrow money, but they got a shareholder stock issue of $30,000. So those are your four financial statements. I would write this down just real quick, just to start getting you going on some of these analytics. Return on assets is stated in ratio form, net income divided by total average assets. Huh? If you ever flip the channels on a radio or you're watching television and you come to the news, you might come to the business news where they say Microsoft today announced ROA of 14.4%. This was 0.6% short of Wall Street's expectations. As a result, the stock fell by 2%. ROA, return on investments, it's a very key item. Net income divided by total assets. So what do we have here? Nike in the current year has 19%. This means that Nike is generating $19 of profit. I'm sorry, let me say it again. No, I'll say it that way. $19 in profit for every $100 they sell. $1,900 in profit from every asset they have, rather. Let's look at the year ago, 17.5%. For every dollar of assets, every $100 of assets, they're generating $17.50. That sounds like a pretty good return to me. Let's talk about return and risk a little bit as we get near the end here. Return. Many different returns may be reported. There's all kinds of them. You'll get sick of them after a while. Return on assets, return on equity, return on spending, all these things. So you have different returns. Return on assets, interest return on savings accounts. We invested $100 in the bank, it paid 5%, we have a $5 return. Same thing with bonds. We might have bought some bonds that are paying us. That's just a return. The return is the actual result, okay? Risk is the uncertainty about the return we will earn. The lower the risk, the lower the return. I'm an old guy, right? And I have a little money that I saved up over the years, and I need to invest it in something that pays me sort of a pension, huh? I can buy U.S. Treasury bills right now for and get 2.5%. 2.5%. That's better than the bank, but it's really not that much. But if you're worried about safety, you can't get anything safer than a U.S. Treasury bond, okay? If I want to take a little more of a risk, I can buy some low-risk corporate stocks, which I've done. I don't think I'm going to make a ton of money from them, but they will return me a nice dividend every year. And then you get into riskier and riskier companies. Right now, if you went to a bank, you're lucky to get 1%. But I can hook you up with a fund where they'll pay you 15% a year. Doesn't that sound great? Here's a company paying 15% a year. Why are they paying 15% a year, do you think? Because it's the goodness of their heart? No, the 15% represents what they have to pay in order for people to loan the money. They have a risky company. There's a good chance you'll lose all your money. So the higher the risk, the higher the return. But you have to have some risk tolerance to do these things. Major activities of organizations. I think we're finishing up here now. We looked at the cash flow statement a moment ago, and we saw that it was broken out into three things: financing, activities provide the means organizations need. Financing is borrowing mostly. Financing, resources contributed by the owner, along with any income the owner leaves in the organization. Non-owner financing, that's where we're borrowing from a bank or raising stock or something. Investing, disposing of big assets that a company uses to acquire and sell its products or service. Investing, you went out and you bought a gigantic fleet of trucks for your company. Those trucks are going to be around for 20 years, hopefully. That is called an investment. It's not an expense. It's an investment. It'll go on your balance sheet as such. That's an example of classic investing. Or you bought stock in another company, you bought a bond or something in another company. Investing. And then finally, this is the good one, the operating. This is the one that we want to generate the income. Operating involves using research to research, develop, purchase, produce, distribute, and market products and services. A clearer way to say it, the operation is the business that it was really set up to do. Coca-Cola is in the business of marketing soda and snacks, okay? That's where they want to see themselves making money. They don't want to make their money borrowing money. That money's going to go back into the business. So operating is the key one. Activities of organizations, planning, investing. And that takes us to the end. Anybody have any questions? Any thoughts, Isaac? Isaac, where's Isaac?
Nope, I'm all good.
You good? How about you, Brendan? Okay?
Yep.
Okay, no question. Zoran, haven't said hi to you. How you doing?
I'm pretty good. I'm doing great.
Any questions or anything you want me to go over again?
No, not right now.
Okay. All right. Well, you guys got a taste for how I teach this stuff. And when is this a weekly class? Do you guys know, Isaac?
What do you mean by weekly?
Once a week, twice a week?
For the Zooms?
Yeah.
It says it's weekly, once on Monday and once on Tuesday. Or sorry, once on Wednesday, both at 1 p.m.
Okay. Sounds good then. Maybe see you Wednesday. Okay.
Sweet.
Thank you guys. Bye bye.
Thank you. Bye.
Thank
Thank
you.
you.